What do you think about the current price of Tesla stock? Of course, it should be noted that the entire technology sector took a knock last year, and analysts are still divided on whether to be bulls or bears in the stock market. Tesla has been one of the most volatile companies in the previous year. Now that the market has turned, be careful not to pass this up when you see it. As a best in Class F company, Tesla will be extremely busy, according to Chamath Palihapitiya, who announced in 2021 that he sold his Tesla position to raise money for other investing ventures. The CEO and creator of Social Capital stated that he withdrew his investment in the Elon Musk-led electric car startup almost a year ago, since the high prices enabled him to raise money for his other ventures. Since I don't have an endless supply of money, the funding for these projects must come from some other source. Palihapitiya stated in January of that year during CNN's Delivering Alpha conference, when Tesla stock was trading for about $800, Palihapitiya told CNBC that the company was a distributed energy company and that the stock could double or even triple again in 2020. Due to the strong demand for electric vehicles and investors' preference for growth-oriented companies, Tesla was one of the biggest stock market winners. The company underperformed the overall market with a 10.7% gain year to year, even though the shares shot up a whooping 743% in 2020. Palihapitiya stated that while he remains optimistic about Tesla, his thesis has slightly changed. He acknowledged that he had grossly underestimated the size of the EV market. According to him, the market has turned and Tesla will be extremely busy, simply operating as the best in Class F company. Chamath Palihapitiya is a highly successful entrepreneur and venture capitalist in the San Francisco Bay Area. In 2021, he was listed as the 10th new billionaire by Forbes magazine. In order to invest in industries that other venture capitalists shunned, such as health, finance, and education, Palihapitiya launched Social Capital in 2011. Since then, the company has grown to include investments in internet companies like Amazon, Tesla, and Slack. Electrification is clearly winning. In 2019 CNBC interview, Palihapitiya stated that while Tesla experienced many difficulties, the question today is whether CEO Elon Musk can construct the infrastructure if given enough time and patience. According to Chamath Palihapitiya, the company will benefit in the long run from its early use of electric vehicles. Palihapitiya asserts that the advantage is that people are concentrating too much on Musk's behaviors. Window dressing and not enough on Tesla itself and its competitiveness in the market. He likened rivals of Tesla, like Audi's new electric offering, to the Zune media player, a failed Microsoft competitor, and Apple's iPod. If you become entangled in all of this peripheral stuff, he might occasionally mistweet. Palihapitiya stated, who cares? Your job as a smart investor is to separate the facts in the news from the fiction and the noise at the time. She was making reference to Elon Musk's tweets on Tesla production figures and funding, which have gotten him into trouble with the Securities and Exchange Commission. Palihapitiya stated that he keeps his Tesla stock because Musk has the capacity on a bigger scale in the future. Tens of thousands of customers are purchasing Tesla cars faster than they can get their hands on them. And once you sit inside the vehicle, your definition of what is expected changes forever. Whether you like Musk style or not, his substance is undeniable. Musk said that his behavior on Twitter and podcast is irrelevant because demand for Tesla cars is strong and exceeds that of other players in the electric car market. A Forge article claims that there are 4 reasons why Tesla stock could fall to as low as $50, one of which is Tesla CEO Elon Musk's Twitter endeavor. Even though sales are only 9% of the total of Toyota, GM, Ford, and W at $389 billion, Palihapitiya and a group of Musk supporters are betting against this style. Betting against entrepreneurs who are changing the world has never been a profitable endeavor. Tesla's market capitalization surpasses those together. 4 competitors stated that some people think buying Tesla stock is a no-brainer. Purchase in 2023, they claim that the disruptive electric car maker is trading much below its historical peak. Like many other businesses today, Tesla is confronted with substantial term hurdles such as rising rates and inflation, which raise the cost of capital and depress growth stock prices. The CEO of the company, Elon Musk, may also have alarmed investors with his actions. Musk paid $44 billion for the social media company Twitter in October, and he famously sold a staggering $23 billion worth of Tesla stock in 2022 to help finance the acquisition. While stock sales can lower a company's value in the short term, fundamentally focused investors shouldn't be too concerned because, unlike equity dilution, which affects the creation of new shares, the sale of existing shares, one man's managerial acumen and perseverance are perhaps less critical to Tesla's continued success now that the firm is properly capitalized and sustainably profitable than they were in 2008, when the company faced spiraling losses that nearly drove it to the verge of bankruptcy. In Q3 2022, overall revenue surged 56% to $21.45 billion, while net income doubled to $3.29 billion, demonstrating Tesla's transformation into a profit machine that stands head and shoulders beyond its counterparts in the automotive sector. Nikkei Asia reports that Toyota, Tesla's biggest rival, sold 7 times more vehicles during the same period, but only managed to earn $315 billion. It is important to note, though, that Toyota still primarily makes gasoline-powered vehicles. Others believe Tesla's business is slowing down following a series of price reductions in China, a move the company's vice president for external relations in China credits to numerous engineering advances. Nikkei Asia believes that Tesla's edge stems from its strong brand, which allows it to charge a premium for its vehicles. The company's narrow focus on EVs also gives it a streamlined production process compared to traditional automakers which produce a wide variety of electric, hybrid, and gasoline-powered vehicles. Investors in innovations should keep in mind that the cost cuts coincide with the larger decline. Auto industry caused by high inflation, high borrowing rates, and persistently low consumer confidence. However, some contend that Tesla should be valued differently than traditional automakers who are transitioning to the technology, since Tesla enjoys pure growth in the EV industry while its rivals are cannibalizing their existing products with electric alternatives, a strategy that could cost them total market share over time. Tesla's management is still optimistic about the long-term, expecting vehicle delivery growth of an average of 50 annually over a multi-year horizon. In early January, well-known value investor Bill Miller announced his short position on Tesla, telling CNBC that he doesn't think it's worth more than the top 5 automakers combined. It's difficult to see the shares staying this cheap for very long, given that Tesla's growth rate is significantly lower than the NASDAQ average of 25 and trails behind mature value stocks like McDonald's and Coca-Cola, which both boast forward multiples of 25 and 26 respectively. Tesla's stock is no longer expensive by any stretch of the imagination, but its valuation is beginning to look attractive in the context of the business's underlying momentum. However, it's always possible that growth doesn't pan out as expected, particularly in the near term as macroeconomic uncertainty, although there are always dangers associated with holding the infamously volatile stock. The company's recent growth and intriguing product pipeline provide a strong argument for the stock. At this price, it might make sense to allocate a modest portion of your portfolio to Tesla shares. Tesla's anticipated Cybertruck launch next year and the company's explosive growth in its energy storage business make for strong growth this year as well. The company's vehicle production is also proceeding well. In the company's third quarter earnings call, Tesla management reported that it had reached a production volume of 2,000 cars per week at its new factory in Germany. The company's new factory in Texas should soon reach this same milestone, the management added. Meanwhile, production at the company's factory in Fremont, California, hit record levels, with $3.3 billion in free cash flow during Q3 of a 148-year-over-year, supporting its balance sheet, and $21.1 billion in cash and marketable securities, up $2.2 billion sequentially. The company is doing well overall during this period. Make sure to subscribe to Tesla stock for more information.